Good evening, friends. Welcome to my channel. Now we'll see what is happening in the markets and what is going to happen in the longer duration, that is in the coming week. First, there are no major events scheduled in the upcoming week, but there in the past week, a few major events have happened. They have their repercussions for a longer duration to come. First thing is US Federal Bank of America, that is equivalent of RBI of America, RBI of India, has increased rates by 75 basis points, that is equal to 0.75%. On the contrary, our Indian rupee has strengthened against US dollar. So we are going to delve deep into these topics. First, see here, this is sample figure of FIIs and DIIs, that is FII means foreign institutional investors and DII means domestic institutional investors, and how they are performing in the week. Simply, if FIIs are purchasing more in the Indian markets, that means that is good for India. Here see, we come to know about this impact or significance of this when we compare it relatively. In the October entire month, FIIs were net negative investors. That means they did not purchase, but they sold minus 480 crore, means they sold equities worth 480 crores. But here see, from November 1st to 4th, just within 4 days, they purchased equities worth plus 6,000 crores. So within 4 days their intention is clear. So that is one cue for us. Don't bother about DIIs or domestic investors, because they keep on purchasing. These are minor negatives, but overall they keep purchasing because of due to SIPs. Net investments are always positive in domestics. Now see, first is currency. On Friday close, Friday is the last working day for any markets. Our rupee closed at 82.40 rupees against $1, but before that Friday it was 83.4 plus. So within 1 week our rupee strengthened by 1 rupee. Interesting thing is that our markets closed at Friday 5:30 p.m. but provisionally, that is into US markets time, they will continue into midnight. By that time our rupee was trading at 82 rupees or 81.98. That means it strengthened further by 40 pies. That is good. So clearly rupee is strengthening now. Within 3 months and 4 months it depreciated from 76 to 84 rupees. Now from 84 rupees it is coming back to 82 rupees. So in the past week, you see, our forex reserves have risen by $6.5 billion. Actually, again we come to know the significance with the comparison. $640 billion was our forex currency reserves in the last July. So within these 4 months we lost $100 billion net worth of forex reserve currencies just to fight our rupee depreciation. But right now from 500 to 531 means our forex reserves are coming back up again. That is good thing for Indian economy. Now we see about inflation. You know what is inflation, but who does combat this inflation? All over the world, every country has their own central bank. In India it is called Reserve Bank of India. In US it is called Federal Bank of America. So these central banks do the combat against inflation. Right now we can say that this combat against inflation is reaching climax. Why? We will discuss that. In the last week, that is on November 2nd, US Fed has increased interest rates by 0.75%. Now present interest rates after the increase are now at 4%. Mostly everyone is expecting that maximum interest rates will reach at 4.5%, not more than that. because if Fed keeps on increasing its interest rates, their businesses will suffer a lot. So it is not a good idea to go beyond that. We will discuss with past significant events. Now see, high interest rates over a period of time will decrease inflation. That is good, but the longer the duration, the businesses or companies will suffer a lot. So right now US Fed cannot afford to increase the rates by much percentage points, but it will let the same 4% environment or 4.5% environment to continue for some days or few months. Everyone is expecting this duration will be at least 1 year. So for 1 year, their interest rates will be around 4%. So what will happen in this environment? Generally, high interest rates are not good for business. Suppose before this interest rate environment, hike environment, US businesses were taking loans at interest rate of just 0.5% or 0.25%, very nominal. Now all of a sudden they are paying a net interest at 4%. That is sudden spike. So businesses find it tough to sustain in this environment. But US Fed is adamant on controlling inflation. Why it is adamant on controlling inflation? Inflation, it is like a diabetic in the economy. It needs to be, it always needs to be under controlled levels. If it goes beyond uncontrollable levels, total economy will collapse. So in this type of environment, what will happen? The recession may occur. What is recession? Recession is, suppose companies produce products, but people are not willing to purchase those products. Then what happens? Companies will not get profits. So if companies are unable to get profits, so they have to sustain their business. So they will find ways to cut their cost. How they cut their cost? First thing is, of course, companies find ways to sustain their business just to find their profitability. First, what they will do is that they cut down on their employee strength. Job cuts. Even in US also, we can see some major big businesses are cutting down on their employee strength. Next is bankruptcy. Those companies that cannot sustain a high interest rate environment can go out of business naturally. That is leading to bankruptcy, because their net interest payments will increase and they will find it unsustainable to take loans at high interest rates. These high interest rates will crush both demand side and supply side concerns in the economy, totally leading to recession. But don't need to worry, recession concerns are very low right now. We'll see. First thing is, companies of course cannot afford to spend much in recession environment. That's why they go for cost cutting. Especially they do not spend on not just employees but also on R&D events also. R&D is hard for any new business, but when they stop R&D, they cannot create new products and people will not purchase the same old products, and that is a vicious cycle. We will discuss later again. First see here, right now due to recession concerns, Amazon, Facebook, Google, some other big MNCs also have announced hiring freeze. Why? They have some recession concerns. They are finding it that they are already overstrengthened. So they did not cut any jobs, just they stopped creating new jobs. Hiring freeze means no new job creation. Here one interesting thing is that Twitter cut down jobs. There is this news is doing rounds, but don't need to worry. Whatever happening with Twitter, this is due to management change, not due to recession fears or anything. simple thing is high interest rates for longer duration will curse demand in the economy, and also supply is also restricted. High interest rates will kill both demand and supply. So these interest rates should not continue for longer duration. Fed should decrease interest rates more or less in the coming 1 or 2 years, at least 1 year. To have a simple overview of how interest rates were there in the economy. Before 2020 corona pandemic, the interest rates were around 1.75. Now, within 2 years, during corona pandemic, for almost up to 2 years, interest rates were very nominal, 0.25. Now all of a sudden it is 4%. Here also see here, this is a 25-year chart. See, we all know about 2008 crisis. After 2008 crisis, from 2008 to 2016, generally say Obama era, interest rates were very nominal. Again it rose. Then again, all of a sudden, due to corona, to encourage businesses, every central bank has decreased interest rates. But corona is once in a century type of pandemic event, so it played a conversely. This low interest rate environment has led to high inflation environment. So now we are suffering. Let's see what will happen in the coming years. But interest rates will not reach more than 4.5%. Just Fed will let this high rate environment to continue, and let this interest rates fight its own fight against inflation. Now see, recession impact on India. Generally, recession impact on India will be very less. There will be inflation impact, but a recession cannot impact India. Why? Because India, largely 50% of population is dependent on agriculture and other services. Even we are not selling any agriculture products that much to overseas US or Europe countries. It is consumed within India. So recession will not impact that much in India. But there are some companies, especially IT companies, that are dependent on US and Europe outsourcing projects. So most of our IT projects are Europe or US projects or Middle Eastern projects related to Western economy. So they might have some impact, especially IT companies only. So impact will be very less considerably. Here is one interesting. There are some foreign companies, foreign MNCs that are doing business in India, that are doing Indian projects. Like there is big infrastructure construction companies. There are there. They will find it easy in this recession environment, because in India this is a high growth economy. Infrastructure or road building or any other construction, this is keeps on going, because still we are a developing economy. We are not that content or this saturated economy. In the US, new infrastructure, the necessity of new infrastructure is very less, but in India that necessity is always there. So these infra and construction companies, they will find it good during this environment. That is blessing in disguise for them, while every company is suffering across the globe. You see, inflation is a concern in India also, but don't worry, demand in India will not get decreased at by any means. We are 100 crore plus 150, almost 130 crore plus population now. Demand is always there. Coming to domestic events, one important event, not much significant. It is significant due to its result, its outcome. Our election commission has announced elections for Gujarat state. Why it is important is, we are not going to any political debate or discussion. It is important because investors always like stable governments in any country. they do not like alliance type of governments, that is governments formed with two or more party support. Suppose simple to say, in 2024 our country is going to 2024 parliamentary general elections. If the outcome of Gujarat state election is any surprising, that is, if other than BJP, if any other party gets majority, that means in 2024 there will be some uncertainty about who will form the government. So I don't think there will be any surprises in Gujarat election, but that will be, if at all there is any surprise, that will be something to look forward. We will discuss about this on December 8th election date. RBI. First thing is that RBI last week on November 3rd, it has conducted one unannounced MPC meeting, that is Monetary Policy Committee meeting. Why it conducted that unannounced meeting is that actually government has mandated RBI to maintain inflation below 6% levels. But due to global uncertain environment and rising crude oil and other, our inflation is above 7% for the past 6 months. So RBI has to give explanation to government. So they conducted that meeting, and they gave that report is undisclosed. They might have given that report any future course of action to control inflation shall be explained to the government of India. So RBI and government of India, both in tandem, they will control inflation. Well, another aspect of our Indian economy is that our credit demand, that is loan growth, is always strong in India. Here one interesting thing is that in India there is a parallel unorganized loan system. Actually our banks will issue loans at nominal 10%, 11% interest rates, that is maximum interest rate. Here people are ready to take interest at high interest rates up to 24%, even 25 to 30% at some pawnbrokers. So if banks are offering loans at 11%, that is a good thing. There will always be customers to take loans, but thing is that they need to provide some collateral. So loan growth will always be high in India. Even right now RBI is pushing banks to increase deposit rates, because in this RBI is also forced to increase interest rates. So consequently our banks increase interest rates on loans but not on deposit rates. They are finding it, if they increase interest rates on loan, they will get profit, but if they increase interest rates on deposits, they will have to give out money. That is their profit concern. Okay, but RBI is pushing the banks to increase deposit rates also, because then only people come and deposit money with the banks, and you can use that money to give out loans. Banks' primary business itself is that giving loans, and then only they will get profit. Here one simple thing is that RBI next MPC meet is scheduled on December 5th to 7th. Still there is 1 month there, so we will get more insights about RBI next MPC meeting in the coming days. So far there is not much talk about next MPC meeting. Okay, coming to Nifty and Bank Nifty analysis, I will upload another video by tomorrow. I will give the levels, how it is playing out after this Fed event, and everything we will discuss in that video regarding Nifty and Bank Nifty. Thank you.